everyone, this is Demo Gonzalez of Heartwood Financial Services. Hey, thanks for joining us for another video. This is a video on financial education. And so it's that time of year again, and no, I'm not talking about time for a pumpkin spice latte. I'm talking about election time. It's coming up in November, as you know, and this in particular is a midterm election which has some interesting patterns that I wanted to show you and help you understand what to expect and maybe how to manage your portfolio around that. So I hope you guys find this helpful. Thank you very much for watching. Alright, so the first pattern that I want to point out is what's called the sophomore slump. Kind of a funny name. This was coined by Sam Stovall. He's the chief investment strategist of CFRA, where we got this data from. And basically he looked back to 1945 to around 2021, pretty close to now, and he noticed that in the second year of a presidential term, which is where we are right now, and especially in the second and third quarter of those terms, the market has historically had a negative return. You can see here by this graphic, negative 1.8 for the second quarter and also negative for the third quarter. So the point here to remember is that these years are kind of unusual from all the other presidential years and non-presidential election years, and it's an interesting anomaly that happens in the U.S. stock market. Alright, pattern number 2. Market volatility is higher in these exact same periods during that second year of a presidential term, right around second, third quarter. So you could see right here on this chart how year 1, beginning of year 2, pretty normal, and then it spikes up around second and third quarter, sometimes fourth quarter, a little bit after midterm election cycle. As you can imagine, there's just a lot of tension. There's a lot of potential change. Usually there's a lot of people that are upset about the current way things are being administered, and so people are kind of riled up and want some change. And so you can see this in the data because it shows volatility, a big spike in this exact period that we're in right now. Alright, now pattern number 3 is basically the silver lining. It's what happens to the markets typically after a midterm election. Now this chart here shows a study that was done by the Journal of Wealth Management. It was a recent study, and they looked at all the midterm elections going back to 1954 to about 2017, and you can see here that over 90% of the times after a midterm election, so they're looking at the first 2 quarters of the next year, which is year 3, right? The market is up 9 out of 10 times. And it's substantially different from what happens in a presidential election year or in just any other year. So it is kind of a a hopeful thing to look at, especially with all the pain we've already been through so far this year. So here are the key takeaways. So first of all, stocks tend to sell off ahead of midterm elections. We certainly have seen that so far, 2022. Obviously there's a lot more going on in the midterm elections that we've been talking a lot about in our market update videos. But this 2022 is no exception here to the sell-offs. And then number 2, there's a notable market volatility immediately before and after midterm elections. So we've seen that as well, right? We've seen a lot more market volatility. You've seen the VIX get up pretty high in the high 20s, low 30s, and that's historically a much higher volatility than normal. And so basically this is very typical of this second year in midterm elections. Lastly is the silver lining, right? That the stock markets do tend to have a little bounce after the midterm elections once that uncertainty becomes a little bit more certain. The market is just not happy with uncertainty. Even if it's bad, it still just likes the certainty. And so I think that's probably one of the reasons we see that kind of bounce. And so for me, the investment takeaway is, first of all, you can't look at these patterns as completely perfect forecasting tools. There's always something different going on, but there definitely is a rhyming to this type of pattern. And so if you've been a little bit disappointed with what we've seen so far this year, just know that this is sort of typical of the midterm election years, and things could be turning around here pretty soon. If you've been a little underinvested because you've been nervous about what's going on with stocks and politics and everything, hopefully this is an encouragement for you that usually following these midterm elections, things can turn around a little bit. And if you've been a little too aggressive, maybe this is a sign that things could still be a little rough here for a while, so it might be a good time to make sure you do get into a better diversified portfolio. Feel free to reach out if you need any help with this. As you know, I'm always happy to help, and this is what I do on behalf of my clients. Thanks again for listening and watching, guys. I hope you guys have a great one, and God bless.